Welcome to meeting number 12 of the Tax Incentive and Abatement Study and Formulating Committee. It is Wednesday, January 10, and we have a revised agenda on your desk. So I will do as I have supposed to have been done for a while and mention that we do now provide public comment, and so I didn't see anyone signed up, but if there's anyone here that would like to make public comment, now's the time. Seeing no one raising their hand, we'll move on to the agenda. Everybody okay with the proposed agenda? Acceptance there. Okay, great. So thank y'all all for coming. We continue to think that we're close, and we are pretty close. At our last meeting, we talked about referring to the GFOA, Government Financial Officers Association, Officials Association, for some guidance or guidelines on how to consider whether we should have an overall cap, and if so, what that might look like. And welcome. We have a quorum here. Good for us.
Hello, happy New Year.
I appreciate y'all. So I appreciate y'all coming back.
Almost everyone.
Yeah, this is impressive. It's a good sign. So I have given y'all, I sent out this morning, 2 documents that can be found on the GFOA website that talk about best practices, both for tax increment financing, which an earlier group had already studied, and we've got a great report on that. And then as well, just on, just kind of, hang on, make sure I say it right, economic incentive policy. And I will say that in general, they've drawn very similar conclusions to what we did, which is that you ought to have a regular review period, that we need to be more transparent with it, and that having regular reporting on the back end is probably a good way to hold people accountable. So yay for us, we've done good stuff. In terms of there actually being any specific guidance on how we might go about looking at an overall cap for the sum of the different entities that we've looked at in terms of different tax abatement and incentive strategies, the GFOA is generally silent on that. And Talia Logbacks-O'Neill in the Finance Director's office offered to connect me with some of the resources there to talk about whether we could maybe get some coaching from them on kind of on a one-on-one basis, and I had a great conversation. I think I forwarded y'all that email. That has not been printed out, but the email that I sent this morning had at the bottom of it an email from Mr. Wegner at the GFOA saying I would be happy to either do some Zoom consultations or to come on site and talk with. His proposal was actually to talk with the council and sort of give them the overview of TIF, and then to work with the finance office on the fine points. And this is my goal for today, is to sort of come back with some bullet points on more specifically what we think would be specific to our needs here. Again, I feel like the TIF study that was done under former council member, now Director Mendez's watch, was very good at describing what that tool is, and the economic benefit study that followed from that also gets some good guidelines on kind of some cost benefit analysis. So I don't feel like the scope of work that he lined out in that email is exactly what would be helpful to us. And so I am asking this group, number one, if we can commit to a few more meetings, hopefully not a lot more. We'll get in a minute to talk about a resolution that's in front of the council to extend the run of this group through April. And then we will be done, I promise. We can do it in that amount of time. I am confident. I do feel like we're getting closer and closer. But in talking with Talia and Aaron from the finance office, they were looking at it from a viewpoint of risk tolerance and what our official city risk tolerance is. And at this point, that is beyond my level of knowledge. And so I would not feel comfortable making statements about those types of things and other things that should inform sort of where we go as we try to either come up with a policy or some recommendations for directing finance department to take it from there and come up with the policy until we learn just a little bit more. And I feel like that group and probably also Director Crumbo are potential resources to help us arrive at that point. So what I would love for this group to do is sort of help me think through what bullet points we want to send back to Dr. Wegner at GFOA to better describe what we think he might be able to help us do. And I will also say that Trustee Gilmore is serving on a GFOA committee that is actually somewhat involved in this process. So she's a resource for us as well. But in terms of better explaining to him what would be useful to us so that we can arrive, I would welcome some input on language that we could send to them for that. Assuming that the fact that y'all are here is an overwhelming statement of, yes, we want to do this through to completion. We think we've got some good things to say, and we don't think it's going to take too many more meetings, but some input from some experts would be helpful. So having said that, I'm just going to be quiet for a minute and let people respond and kind of help articulate what we want to be asking GFOA for, so that when they do come in. And the finance department, I think, feels confident that if there's a fee involved in this, that they are willing to help find funding to make that happen, because this committee technically doesn't have any funding. So we will also welcome comments from our experts here in the audience. So, Mr. Mendez.
My only suggestion is, so finance has said, well, it depends how much risk you want to take, and a lot of the materials talk about that, and I get the sense that between the lines, the guy from the GFOA sort of indicates that. And so I think one fair question would be, okay, great, super risk. What constitutes low risk? Like, how do we know what low risk is? How do we know what medium risk is? How do we know what high risk is? Like, how do we measure that? I think that's a fair question, both to finance and the GFOA guy. I'm sorry, I don't remember his name. I don't mean to call him the GFOA guy.
I wasn't here last time, so sorry if this is redundant. I really got stomach flu. So are we quantifying, when we say risk, so to me, there's the need portion of what could be filled, and some of that specifically with the overall need, that's hard to quantify, right? How much what need? It's like almost unlimited, right? But then like associated with the LIHTC, that could be quantified because that's somewhat capped every year at the state level, and only so many LIHTC grants are awarded every year. So is it that our committee will be looking at, say, quantifying the need, and is the risk quantifying a cap to council? And if it was couched as the need, and then, the risk, that's for council to decide who gets, where those buckets come from? I mean, are you kind of not, is that helpful? Or it needs
So the way I've thought about it and described it is that it's amount of property taxes that get spoken for years in advance without going through the operating budget. If Oracle gets built as planned, over the last 4 years, we will have doubled the amount of property taxes that get sidetracked out of the operating budget into other things, whether it's good, bad, or other. And I think just objectively, the idea of doubling the amount of property taxes that get automatically pulled out of the operating budget, never gets appropriated, never sees the light of day in the council, just automatically goes off to pay for other stuff, whether it's for infrastructure for Oracle or a pilot to facilitate affordable housing. There's some amount of property taxes that no longer flow through the annual operating budget. And I would argue that clearly you wouldn't double that every 4 years forever. Like there's, and to the extent that it doesn't make finance director's queasy where we're at now, they're putting a thumb in the air and deciding, low risk, it's fine. How much property taxes could one sidetrack out of the operating budget process? 100 million, 200 million, 500 million? Could you sidetrack $1 billion worth of property taxes for TIF deals? Like, clearly at some point there's a limit, and the way I've been thinking about this for a number of years is whether there's a hard number or sort of a heuristic, why is the finance director not freaking out? Putting some meat around that could help the public. Like, I'll make an example. The need is unlimited, and if we concluded that we're so far in the low risk, you could quadruple the amount of property taxes that are pulled out of the operating budget, not subject to the council annual appropriation. We could quadruple it and still be in low risk. Then we could go to the community and the council and say, hey folks, we could quadruple our TIF to address this unlimited need and still be in low risk. Alternatively, if somebody said, oh yeah, we're bumping up on high risk right now, it's a risk to the operating budget to sidetrack any more property tax dollars, then we would be super stingy with handing out further TIF deals regardless of the unlimited need. That's the way I've thought about it.
And that's helpful, I guess, as it relates to this committee, and I can only speak for myself, I don't feel qualified, and I think that's where, and would we feel an expert would be qualified, because that's what we're saying. Do we bring someone in to answer that question? Because I am still a neophyte. I feel like learning this stuff, where you guys have been in the budget process, but I think trying to quantify, so there was different ways that these dollars could be allocated, right? So it's like, that's also a little bit of a throttle, maybe not, maybe they could go through IDB and those MDHA, they would be reassessing, but right now, the main one was the Health and Safety Board with the LIHTC. That could be quantified about how much, and maybe, and again, maybe I'm getting too in the weeds, but at least that we could quantify something and be like, is this palatable for year one? But then getting to that bigger answer, I feel like needs, I don't know, I feel like I'm so far unqualified to give input on that, because just not knowing, I just don't even have an ounce of the vocabulary. Yeah, I mean,
Sort of my last comment about this, because it's y'all's decision to make, but I mean, this thing that I'm describing has been a topic of discussion, like Councilmember Allen knows that I've been talking about this
This is
since
the reason we aren't here.
2018.
Is our
And the
reason.
enabling legislation that created this committee wasn't just about the uses, it was about how much also. And it is admittedly a hard problem. And I've also told Councilmember Allen earlier today, if you all decided we've worked for a year and we've done a bunch of stuff and it's really valuable, which I totally agree with, and we're just not qualified for that, the administration is still going to drive some metric, because if for no other reason than to build the East Bank, we're going to spend we're going to propose a really giant TIF that's got nothing to do with any of the stuff on your list of things we should spend it on. It's going to be infrastructure, I don't know if it'll be just infrastructure. It'll be a giant pile of money for infrastructure. And so to be able to explain to the public, we're safely in low risk, and therefore don't be bothered by this big TIF. Like, we're going to, I believe, do that work anyway. If the committee were able to get enough information from either finance or an outside source to say, think about what low risk is this way, that's awesome. If you guys decide you've done a ton of work, and
I just feel like it gives you more, I think it gives the whole decision-making process more legitimacy if the administration that is trying to do this process is not the one who's decided what the criteria for deciding if it's okay or not is. I think it helps everybody if we continue to do this in a thoughtful, in finance,
And also
best practice
for
informed
the
way.
unlimited need that you mentioned, I mean, I'm sure that it is limited in some way, but for all practical purposes, it's unlimited need. If we got backup for the idea that you could quadruple TIF and still be in the low risk category, then like we could reset expectations about what's a safe amount of tax increment financing and or pilots.
Okay, and I guess I'm ready to roll up my sleeves. I guess I am saying is what outside of this gentleman, what other resources? I mean, so he would come in and meet with council and with us.
I think.
And assess, like,
I think he will help provide us with the vocabulary that we are looking for. And I think ultimately, we're not gonna come back and say, you know, the appropriate thing is 5% of total budget. I don't think we're gonna get to that point. I think we're gonna come back and say, here are 5 things that need to be considered based on what, you know, we've learned that, you know, other top cities across the country are doing and that type of thing. So, I mean, my hope is just that we'll be able to just more fully articulate these are the considerations that need to be taken into account and, you know, if we just get to that point and then can charge number crunchers to take those considerations and say, and therefore that lands us here, that's fine. We don't have to get to the final endpoint, but I feel like there's one more step that we need to help put together that can say these are all the things that we, you know, based on what we've learned from the thinkers who are looking at this from a, you know, nationwide outlook. You know, have the folks that have learned from their mistakes or that have done this before, you know, have weighed in. They haven't done it so much that there's already a policy paper on it, but I think there's access to enough people to ask these questions that working with Mr. Wigner, I think we can get closer to knowing what we're trying to do.
And I think there are a bunch of different data points that you can look at, because generally, every year with property tax collections, about what, like 3-ish%, like you either collect late or don't collect at all.
Mm-hmm.
And so if you're doing projects that are generating more property tax income, but you're siphoning off some of that property tax, future property taxes, at a certain point as that number, the amount you're siphoning off grows and grows and grows, you're going to hit up against that deviation that you don't expect to collect every year. So like you're looking at, you know, the percentage you don't expect to collect. As property taxes grow, you also have to look at, and more projects come online, you look at the cost of maintaining those additional properties, and that's in terms of like additional city services. So looking at how the expenses for the city grows. Just putting all of that in, at a certain point, you're bumping up against what you expect to not collect. And so I think there's somebody who can do some nifty chart to show where that point is.
Right.
So like as your property tax revenue grows, like at what percentage does your cost of city services grow?
Mm-hmm.
Yeah, that's along, sort of playing off that, something I'm sort of trying to get my head wrapped around. You know, for most of the tax incentives in the city, I think in general, taxes don't go down. Right, so I'm thinking about, I know that's the case for the one I'm most familiar with, the LIHTC pilot. You know, the taxes are never going to go down from what they were. And so in a sense, there's no loss of revenue for the city. You just have, you know, maybe some affordable housing built that wouldn't otherwise be able to be built.
Say that
The
again.
associated services aren't free.
So, yeah, so just in terms of like for most of the tax incentives, I think that the city deploys, generally we don't see a loss in a deduction of tax revenue. We just see, so there's a gap potentially in the future of what the revenue would be.
Right. So you would see an increase in property tax revenue, but then you also have an increase in the cost of city services.
Mm-hmm.
So if you have a smaller increase in property tax revenue, like how much in that increase in the cost of city services, like at what point are you at a deficit?
And I put, if I may,
Yeah.
put a fine point on that for the East Bank. If we were to do a TIF on the East Bank that used 100% of the increment, you know, property taxes are zero now.
Yeah, that's what I was thinking.
And, you know, if we have 2,000 residential units and 500 hotel keys, and a bunch of retail, like somebody's gonna wanna put a police substation over there, and somebody's gonna want a new fire department on the East Bank, like I've been told these things are coming. And so like right off the bat, the idea of doing a 25-year TIF at 100% of the increment, clearly we're losing money
Yep.
on that.
Well, certainly at that
for 25 years.
locality and maybe across the city. There might be secondary benefits from all that stuff
Well,
happening.
and almost all the TIF deals that exist in this city today are 100% TIF deals. Most of downtown is a 100% TIF deal. It's only the last 3 or 4 TIF deals that are less than that, are 50%. And so arguably, I mean, then you could ask a question, if somebody said, let's do a 50%
Yeah.
increment TIF on the East Bank, and you put in the same number of housing units and hotel and retail, it's pretty easy to see where on a 10 or 15-year time horizon, the city's probably still in the hole on operating expenses on the East Bank, and only once you start generating full development and the property taxes reach a certain point, then at some point you start making money on operating expenses. But in that way, especially 100% TIF deals, it's not clear that they're actually good for the city. Year-to-year operating budget.
Yes. So part of me wonders if we can. My inclination is, say, for this type of tax incentive, let's think about a cap, you know, for that. So maybe would it be helpful, you know, instead of trying to think of a global tax incentive numbers that, you know, historically have been economic development, I think we're different. I think it's one of our recommendations is that we're looking to actually do more broadly social ends with our tax incentives rather than economic ends. And you're doing this sort of cost benefit, profit and loss kind of analysis with the economic incentives that I think most of what we're targeting towards is less that. And so it makes that equation a little bit different. But part of me is wondering, can we figure out for the East Bank, what is a good absolute dollar figure or percentage? You know, maybe it's not 50, maybe it's 25, maybe it's 75. And we can sort of think about, okay, this is what this is trying to achieve. It's trying to catalyze this really set of parking lots that should not be set of parking lots. And how do you change these set of parking lots to not parking lots? And we need to invest some money as a city, and we've kind of decided that that's a good idea. And to me, thinking about quantifying that for a specific purpose, you maybe use one analytical lens and one set of numbers. And then for, you know, different types of things, you use it different. You know, maybe use a different formula for the equation.
For me, over the years, I've concluded that I personally don't have enough information to reach that conclusion, because it feels like a gut feeling.
Yeah, totally.
And that's why whether, it would be great if the GFOA could help guide what's safe, what's risky, what's not. But beyond that, you know, there's like 5 former finance directors in town that at least those people could be interviewed about, why did that not freak you out? Like, how much would it have to be to freak you out? And at least get, and if this committee either doesn't want to or is not able to get specific enough information, the thing that I'll do on my end is basically interview the 3 or 4, 5 former finance directors in town and try to zero in on the why did it not freak you out, what would freak you out, to try to figure out when they put their thumb in the air and say, that's good, I'm okay with that, you know, why is that, for some guidance about how the rest of us would know when the wind starts blowing in a different direction.
Gotcha, good thoughts.
So, so you were saying you didn't feel like there was enough information to correlate percent increase in city services to like property taxes or some other density type of metric to maybe adjust the TIF of like the percentage of TIF that's captured?
Yeah,
Or is that getting way too?
well, the 2019 study that we did, we had, on that one, it was a different objective than this committee, and that was set up around, we had an affordable housing person, Paulette Coleman, we had a lawyer who documented TIF deals, we had a developer that developed TIF deals, we had a banker that made TIF deals, trying to triangulate on everybody's perspective. And the idea about percentage was, so the agreed unanimous opinion was the era of 100% TIF should be dead in Nashville, absent extraordinary circumstances, because of this impact on the operating budget issue that Councilmember Toombs mentioned. And then the unanimous recommendation was that you needed, like, saying a specific percentage, and that's locked in for everything, the percent of the increment that you could tie up, was counterproductive, because there might be, like in some instances, we talked about having some TIF loans to smaller entities for capacity building for minority-led businesses. And so you want to be more generous with the TIF on that, A, because it's a smaller deal, and B, because you're trying to capacity build in a way where if it was a very large, liquid, established developer, you might say, we need to make sure we got enough money to run our city services, so you're at 25% of the increment, and you other folks might be at 60% of the increment. And the consensus was to leave that sort of flexibility rather than picking a specific number. And the recommendation that came out of that was, I think a default of 25% of, so 75% of the increment, 25% to Metro. And then the Cooper administration, which I appreciate, pushed it further and had their default at 50% of the increment, to leave 50% for operating expenses.
LaTanya, I'll just ask you, I mean, at this point, one of the things that I think we've established is whatever we do, I mean, discretion is great, but at some point you have to be able to have a set of criteria that
That's
you
what I was just
compare it
gonna say,
against to
yeah.
say, we gave you 50% because of these
Metrics.
valid reasons that we've talked about and agreed on ahead of time, and we gave you 75% by following the same process, not, not just we like you better, because we can get ourselves in trouble that way, and we're trying to avoid that.
It's just hard for people to quantify too.
Yeah.
To understand.
So again, just the more you can articulate what the standards are, or what the criteria are, I think that's part of what we're trying to get at. So I think what I can do, I have written down a lot of different thoughts that I can send to our friends at GFOA and ask if they would be willing to have either a couple of Zoom interviews with us or attend a meeting or two, and then also, Mr. Mendez, if it's okay with you, we could just set up the next meeting to be the interviews of all the finance directors we can get to come and do that here, or I don't wanna take your phone away from you, but that does seem like valuable information for us as well. I mean, to have that as an agenda as well, seems worthwhile. Comments on that? We could spread them out so they're not all here listening to each
Well,
other.
I actually hadn't thought about the idea of their relative willingness to talk. I hadn't thought about that.
Maybe we do one-on-one interviews.
One would have to ask them about that.
Okay, we can try. On camera. Well, we can explore which will work better and.
I mean,
we'll
you can
take it
get, I'm
there.
sure you can get the current finance director to
Yeah.
talk about what could potentially make him queasy or not.
Right. Well, that's a good starting point. Okay, we'll explore, and see what happens on that. So, just to wrap this up, thoughts?
Well, you mentioned, I think, both documents, but definitely one was something that always gave me heartburn in my prior role, was the monitoring and compliance piece. Whenever we do these deals, there's a promise of jobs for Davidson County residents. We just had a meeting this morning with the IDB, putting in place a new bond application, and we're asking in that application, how many expected jobs are you planning to source materials and construction from Davidson County? There's no back end side, once these deals are done, to track, did these
Yeah.
jobs go to our residents? Are they still with our Davidson County residents? Did we use suppliers in our county? So I think we need to.
I think it's appropriate to add to our, in the sections where we have both the assessments and the recommendations, we want to see more robust reporting on the back end, and then a recommendation to have an annual reporting process.
I think we need to flesh it out even more, like who is
Okay.
actually gonna receive that information from the multiple entities? Whether
Yeah.
it's IDB, whether it's Health and Ed, whether it's MDHA, is there gonna be one location to track all this stuff?
Right, I mean, that's a good point, and where to send those.
Just IDB alone, we don't know.
Right. And, I mean, in general, council now gets so many reports that it's hard for us to read them all. However, we've now got this great council report resource website where everything lands. And so I can go, oh yeah, I wish I had known if we've gotten those reports, and I can then go back and look and see the past 4 years of what's been done. So I think both to the council, and we've also talked about creating this central website under the trustees webpage. It would also be a good place for that to land. So I think that's appropriate to add to our draft of the bill. And I've got some language sort of percolating on that we can, again, have another version of another revision of the document to look at. But I think you're exactly right that needs to be stated more explicitly than it has been in the final version that we've had. That's easy enough to do, and I think we can all look at that language and decide on that. In terms of what we want to propose to Mr. GFOA, as we called him, what I've got written down is the items that we would like for him to, we know we want him to talk about, or to talk about the risk tolerance, determining what makes low, medium, or et cetera, and then how would that inform caps on any types or just the economic development types of incentives. And then to consider, do we balance that with benefits that we see from things, if those can be quantified? For example, if providing housing has a specific value, do we end up with some kind of offsetting calculations that are done as well? And then to look at what gets diverted from the budget, outside of the budget process. Do we then compare that with a multiple of what we're currently diverting, or whether it's a percent of the operating budget, or a percentage of total assets, or comparing it to our bond rating, or looking at delinquent tax amounts? I think that was one of the things you said, Councilmember Toombs. Or to compare it to the cost of maintaining new properties as they come online, or any other measures. So to ask him to help us think through which of those things or what other things should be talked about on that, and then.
It seems to me maybe not the only important metric, but one of them is, are we getting a good value for our money spent that way? Like, is it better? Is committing this money in advance, if council today is tying the hands of council tomorrow, it's effectively what's going on, right? Is that a good, worthwhile expenditure of funds or not? That to me is relevant, and the other types of percentages of some other number to me are perhaps rules of thumb or other things are sort of maybe poor. They strike me as potentially poor proxies for what we are as cities most interested in. That's is a the relative value of a dollar spent here versus left in the general fund.
Oh, I see. So you're saying just looking at it from only a financial standpoint is not taking all the important.
Or is it a good? No, I think sort of like, is this dollar being spent here? People feel like this was a worthwhile.
Right.
In considering the fact that it's actually a dollar spent today, and a dollar spent next year, and a dollar spent the year after that for 10, 15, 12, however long the pilot goes for, or the TIF goes for. Are we feeling like that was a better use of dollars than that being available in the general fund? That's the trade-off. And to me,
But is that like, I mean, how do you do that? Again, I'm probably getting too specific, but on a yearly basis. So you divert this dollar this year, it diverts it from this year, and that changes, I'm assuming. So is that the kind of analysis that we look at, like on the next 5 to 10 years, or is there a way to actually, I don't know how city services is quantified in the budget, and like, if you add 100 apartments, does that, I mean, is there a way to figure out how city services, because those are like protected, right? You can't do anything with those. We have to do that, and then the rest is somewhat of a value proposition. I'm sure I'm missing something and making this way too simple. But then it's, I mean.
I view it as both and. To me, the value proposition is the first thing. And like when we do I gotta stop saying we for the council. When the council has done the pilots, when I was there, on the process that we helped set up circa 2016, 2017 was if there's a giant pilot for 6 units, it wouldn't get through the council. It's gotta be, and it's a little, feels like, there's not a hard metric to it, but we needed to feel like it's an adequate number of units for an appropriate amount of time for the dollar amount that's being spent. So that value proposition, I think, is 100% the first gate, but you wouldn't do that with 95% of the budget, because then you couldn't pay the police department, you couldn't pay teachers. There's some, I argue, some level beyond that where, because of the unlimited need, would you spend 40% of your property taxes on pilots and TIFs? No is the answer, because then you couldn't have a police department.
No, and then,
But are we talking about the incremental, like above, like funding police and trash and all those things, right?
That's
I
the
mean, our
thing
$3
with
billion
TIF.
that we have now,
Is-
we're talking about above that. is
Or
that
above that, and again,
That's
this
the thing, TIF comes out
out of
first,
first of that, but it's in the increments.
which comes, like if you collect $1.5 billion worth of property taxes, the $35 million to fund TIF loans comes straight off the top. And so collecting $1.5 billion worth of property taxes gets you 1.4 something to spend through the council appropriation process.
I guess in that, and again, maybe I'm getting to, but like that says for the increment, you're increasing the property tax, then that increment is fully needed for general services, which are just to city services, which we don't know.
Well,
And then, so there would be a percentage that could be the value, where is that?
Up until now, almost all the TIF deals in town are 100% increment, all the increment gets
Okay.
used. And the ones created, like Oracle created during the Cooper administration, which isn't in place yet because they haven't spent the money and there's no property tax revenue. But when that one gets going, it'll be half the increment. So arguably, if you take property taxes that Oracle ends up paying, and half of it is going to be reimbursed to them for the TIF, and the other half arguably is enough to pay for city services.
Let me check that, that's the question. All right, I want to respect our time, so, my proposition is that I will, work with Director Darby and come up with the bullet points that Talia has asked me for to send to GFOA, and then see if she can circulate them? We'll post it. And if there are any comments, make them to Director Darby on that, and we'll try to get that out, soon. And then I would say if we just think about sticking to this Wednesday schedule between council meetings, if that works for people.
Can I ask one thing? Can we
Sure.
consider looking at metrics for the TIF? I mean,
Yeah.
at least some base ones, because I feel like that's also part of this. It's like it is.
Yeah.
You know, and
Yeah.
that's the hard thing.
Well, and I guess that's part
at
of
least
what
base of it.
Yeah.
If we're, anyways, maybe
mean,
I'm
what
just
I've-
growing it. Okay.
what I have listed in here is, let's talk about, do we look at, twice what we have, some multiple of what we have now, some percentage of the operating budget, a percentage of our total assets, how it affects our bond ratings, something compared to delinquent tax amount. So right now, I've listed some for examples, and what other ones would they suggest from GF? I mean, I don't know that I know what those are, but I'm throwing out some starting points, and hopefully we'll be able to determine what those metrics would be when we have a more robust discussion. Does that make sense? And then to articulate, just to get people who are finance directors to talk about other things they would look at. So I will do that. We will try to get that. We will try to be back here at the beginning of February on Wednesday. Maybe there will be cookies. And just so you know, there is a resolution in front of the council that would officially extend our time, because officially we're supposed to end January 31st. So if the resolution passes, then then our drop dead is April. And by golly, we're gonna make it, so.
One meeting a month is gonna get it, or we may just do this next one. and speed it
February,
up.
I think it'll take that long to get
All the
GFOA in line, and then when we meet with him, he may say we're gonna need to do twice a month for that time.
What's the February date?
Valentine's Day.
Is it? Yeah, let's see.
Hey, I'm okay with that.
Well, we had been meeting,
February the 7th, 4 weeks from today.
is the
Oh,
7th,
7th, okay.
so that it's not Valentine's. So that will be the day right after the council meeting, but I think that's the schedule we were on, which is exhausting for many of us. But let's try that. So next meeting is,
Can I make a quick side point, not a side point, but to piggyback on what you had said, is that, I'm here on behalf of the Office of Trustee, and,
Okay.
obviously, we're a big fans of everything that's going on, as the councilwoman has mentioned. One of the things that has been discussed is that, the trustees' website would be, kind of a tool or a hub, for information about, some of the new tips that we're having here. And one of the things that we, in our office, that we have a limited ability at times to adjust the website. We have to, we work with IT, and sometimes things are a little bit slow. And one of the things that we obviously would want is a more discretion in terms of faster access, more programs that are robust, because we want to have people satisfied with the services they're getting. And to be able to, obviously, I fully expect that this committee is going to ensure that the application or that the website that allows the residents of Nashville and beyond to easily access the information in a way that's user-friendly, have a nice interface. And so we want to just make sure that that's a part of the discussion in terms of, as we move forward in our future meetings.
gotcha,
Thank you.
okay. More easily. And essentially what we're trying to do is, have the trustees' website be the place where if I go, I think I want an economic incentive, I wonder what's available, a tax abatement, I start there, and then there are links to the detailed things on
That's
every
right.
page. so that y'all aren't having to maintain everything, you just gotta make sure your links are good, so.
Oh, yes, ma'am.
That may take some of the burden off of y'all, but I
Yes,
think-
ma'am. Yeah, yes,
But
ma'am.
again, just making sure that there's enough, standardization so that we know that there's a report that can be found somewhere, if not on every website through that link, then somewhere in a centralized place, that I think is really important, as well as on the council
Yeah,
websites.
And I think part of the intention with the trustee is that would be not only what could be used, but where and how it's been used thus far. So like the data on where there are TIFs or pilots and sort of a little bit more like and the
Okay.
dollar value of that. I think that was kind of
Yeah.
the sort of home for the transparency database.
That's right, because I'm sorry.
No, good.
Because it's all attached to tax policy.
Exactly.
And so, we get every week we get thousands of phone calls, and we're probably the only office that get thousands of phone calls about taxes. I mean, there are other people that get thousands of phone calls too, of course, but not about taxes. So, and we talk to tens of thousands of residents across the city every month and every year. And so, so people think about taxes, they think about the Metro Trustee's Office. And so, again, it piggybacks on our ability to kind of the synergy of all the policies regarding taxes.
Gotcha,
Thank you.
gotcha. Thank you.
Thank you.
And so then our goal is, at this point, is in April, by golly, we will have something to present to the council, whether that's a full-blown, or just 10 minutes in front of the budget committee or whatever. But I think the goal is for the council to be aware not only of the work that we've done, but the conclusions that we've come to. So that was our plan for that. I mentioned the resolution. Anything else? Any other business? Great. Okay, I really appreciate y'all coming. I will try to give farther ahead notice in general. But awesome job here today, so I think this is great. If there's no other business, then we're adjourned. All right.